Greetings everyone out there and welcome to the BCB Cyber Series that takes on the tech stocks that can provide the cyber fuel we need to pursue our digital wealth passions. Today we are returning to mega cap tech Tesla stock, as Tesla is set to be added to the S&P 500 on this coming Monday, December 21st, 2020. Much is about to change and much already has. Before we get there though, we always love those reminders. We dig for the cyber fuel we need. We are always working to make sure the best of the best, those monster companies in tech, will form a key portion of our portfolios. For all these mega cap stocks, just like Investopedia, our core defining feature here today is that it is a company with a market cap of over $200 billion. As always, though, we dig deeper still, looking for those companies that are pushed by incredible disruptive technologies with a great story, not to mention having a solid base in those financial numbers. Before we dive too deep, though, we strongly advocate that we don't ever act solely on anyone else's opinion, not even ours. Make sure we're all thinking for ourselves out there as self-definers and making our own decisions. In the end, the responsibility is on each one of us as individuals, so decide wisely. Jumping right in now, the BCB Cyber Way, we cover three quick pieces of information. One, we tackle the story to find out who and what the company is. Second, we look at the numbers, both positive and negative. And third, we finally discuss our position on the stock. This is TSTB, Tech Stocks to Buy, Mega Cap Edition. Remember, this week we're taking on Tesla, that Palo Alto, California energy redefining enigma, cleverly, unintentionally disguised as an automobile company. Yes, that is Mega Cap analysis starting from the week on this past Monday, December 14th. Tesla is most definitely a tech company, not just an automaker. If there is one thing that 2020 has proven, it's that Mad Money's own Jim Cramer, we love that Jimmy Chill, was right about Tesla. This is no automotive company. Tesla's story is much deeper. It is, in fact, a tech company first and foremost that makes cars, and should, in fact, be compared to the likes of NVIDIA and AMD. As we see here, it is a much debated question, but clearly Tesla is a tech company, where Elon Musk leads life like a real Tony Stark. The products and business model are so much more, with a mission statement that seeks to accelerate the world's transition to sustainable energy. The product of Tesla may be oft understood to be cars. Whomsoever assumes that, though, is grossly underestimating this incredible company. We see the deep dive developments here as a data company with vehicle software. We have full self-driving capabilities coming online, a brand new battery pack, reduction of costs, and pushing that AI model in the neural net. Tesla is creating its very own ecosystem for technology for the automobile in the same vein as Apple has for phones. The software experience is central to the customer as it provides the opportunity to add value to an individual's investment in their mode of transportation. Tesla is working to do exactly this with everything from autopilot to power charging again, and this is just the beginning for a tech-enhanced mobile environment that is quickly becoming the centerpiece of our lives. Here we see the expansion into that overall energy business with over 2 times production in Q3. They are rapidly scaling to redefine energy. The quality and therefore reputation of Tesla as a product is considered in much the same vein today as something like an Apple, as they are both racing forward in terms of customer satisfaction, one of the most important metrics out there. Here we see range increases, cost reductions, and a general push towards making that customer happy. In addition to this, Tesla takes aim at the ESG world, that's environmental, social, and governance, of investment, as well as becoming the poster child for climate change innovation as a whole. That's from cars all the way to general energy production. The push for energy business to remodel the world under solar is well underway, and the company is making great strides to make it quick, efficient, and effective. A true path to any investor's heart. Also this week we're talking about the story element where Tesla takes its rightful place on the S&P 500. Finally. Perhaps the biggest news this year is that inclusion into the S&P 500. The chart above gives a quick and easily understandable entry into how significant this inclusion is. Tesla's going to enter into this index on December 21st. That's this coming Monday, from the closing price that hit this past Friday on December 18th. But there may be a very bumpy ride ahead. Rumor has it that traders may be looking to move out on the 18th through the 21st. That is this coming Monday again. But remember, the BCB Cyber Way, we advocate investing, not trading. This may just be another entry point for us Tesla fanatics out there. As for what Tesla is actually worth, there is a tremendous amount of debate. From under $100 to nearly $800 per share, there is definitely wild speculation. Our assessment, though, is that for a company changing the world around us and more importantly our daily lives, it's worth riding the wave, but to do so intelligently. With that, we jump right into the numbers now. BCB Cyber loves to follow the 5 specific metrics of revenue growth, forward price to earnings, return on assets, operating margin, and debt considerations. Starting out, we see that Tesla is definitely still a growth driver, with most recent numbers on trailing 12 months demonstrating another significant increase in revenue over 2019. And that forward PE, yes, it's still ranking high, but it is right in line with other great tech disruptors. Here we see Tesla having a forward PE of 151.52. However, when you compare that to Shopify of 277.78, you can see that they are right in line with those kinds of growth opportunities. Now we flip to compare the return on assets and the operating margin. When we last examined Tesla in October 2020, we saw that they had an operating margin of 4.74% and a return on assets of 2.17%. However, as of this past week, we saw Tesla's operating margin jump to a 6.11% and return on assets over the trailing 12 months increasing to 2.74%. In just a short couple of months, we see that both are building in a significant fashion. Operating margin sits now at that 6.11%. That's a whopping 28.9% increase, and a return on assets at 2.74% represents a substantial 26.3% increase. Flipping the script now back into debt, we look at the total cash accumulation of this wonderful tech giant, and we see that they have $14.53 billion in the most recent quarter of cash alone, with a total debt outstanding of $15.16 billion. That debt is definitely well covered. That cash position, it's nearly doubled what it was in October. Back then it was $8.6.2 billion, and again now it's $14.53. Definitely Tesla is shoring up their position and increasing their possibilities with regard to financial flexibility. Flipping back over to the BCB Cybertech now, though, we still don't think these companies go far enough in assessing the potential for Tesla. They do have an incredible future, and they are an extremely healthy company. Again, with that cash flow cover and that debt issue, we see that BCB Cyber is in on this as well. We love it. This is a great, exceptional growth potential. It's got a great balance sheet. We think that there's so much more here for Tesla and so much more to go. So for that BCB portfolio position, we had, as of this past Monday, a 22.29% stake in Tesla with a cost basis of $155.42. Tesla is definitely a stock worth buying at the right price, and one that the BCB Cyber believes to be the right fuel for the fire. Remember, we are just like the masses, struggling to make ends meet and build our future. So we are building and doing our homework. This is just what we need to start us on our journey to start cyberizing our lives. BCB Cyber believes in the potential for this risky tech innovator and loves the story. However, this is definitely a stock worth buying at the right price. Remember, and one that BCB Cyber believes to be the right fuel for that fire. Remember, we balance our perspective and cyberize our wealth over a longer term of 5 years or more. We'll definitely be looking to add to this position with the right portfolio percentages, ultimately ending up between 13 and 15% at the right price. Tesla alongside NVIDIA are our two biggest holdings, and we love to keep seeing them grow, maintaining balance in our portfolios along the way. Remember, as always, think for yourself, do your own homework out there, and cyberize your life with the best in disruptive technologies. Learn more in our wealth section and dive deeper into establishing the baseline at bcbcyber.com.